Hello everybody, welcome to another episode of Erickson TV. Curtis here with Lauren. Hello Lauren.
Hey Curtis, hey everybody.
So Lauren, for our clients that did not watch last episode, we are doing a kind of a series on the 10 craziest tax deductions that the IRS says are legit, okay? And so if you haven't seen the previous one, go back and look at our archive. This one was an interesting one, babysitting fees.
Okay.
IRS specifically says that babysitters are personal expenses. This person wanted to write it off as charitable expense because they were hiring a babysitter so they could go do volunteer work.
Okay. They got away with this?
Well,
let's see. Let's see what happened.
So they went to do, Mrs. Kingsley hired a sitter so she could do volunteer work.
Yeah.
And deducted the sitter fees, and the IRS said no on initial audit.
Right.
But she won in tax court that's saying that on appeal, yes, that was a legitimate charitable expense because it was necessary to do the charitable work.
Interesting.
Yeah. So the takeaway from that
That's
is
very interesting.
Yeah, very interesting. The takeaway from that though is the babysitter has to report that income on his or her return. So it either is a 1099 or probably some type of W-2, but that it was a legitimate expense. Okay.
Fascinating.
Here's one. Drunk driving expenses.
Oh gosh, okay.
A gentleman drank too much at a party. He waited for hours until he thought he was okay to get in his car, but he still drove off the road and was arrested.
Oh.
His car was damaged and his insurance company refused to cover it. So the drunk driver had to pay for the repairs and deducted them as a casualty loss, he claimed.
Right. Okay.
The IRS in the initial audit said no way, but the tax court said yes, they allowed the deduction. And I think it was because the car, the reason he was at the party was for business mingling, as a business purpose.
Huh. Okay.
So an individual that was at a party couldn't do it, but because
Right,
it was an established business purpose for that reason, and the car was driven for that business purpose, it was a casualty loss.
Interesting.
Yeah.
Okay.
Okay, so let's go ahead and end that episode on Erickson TV. We'll see you on the next part of the series of the 10 craziest tax deductions allowed by the IRS. Bye now.
See you next time.